Let's move on now and check in on the latest when it comes to the grain markets. Joining the show this week on Wednesday afternoon was Jeff Peterson. Of course, he's the president of Heartland Farm Partners. Harvest progress rolls on. Had a little rain shower across eastern Nebraska last week, but combines back moving this week, aren't they?
They definitely are. It's been interesting, this spring that came through. I thought it was going to be a quick hitter. I thought it was going to be in and out, weather back, combines going right away, but it's taken a little while to get back going. But the thing I'd say, Bryce, is I think that's kind of the theme of harvest this year. It just seems like it's taken a little while, and in many areas, depending on what the yields have been, the traffic at your grain buyers really hasn't been as robust and as much, and it hasn't even, in some cases, even seemed like harvest.
The sun just wouldn't shine there for a few days, and that kept people out of the field. So I have to ask you a couple burning questions I think are on the minds of producers today. A common question I've been seeing thrown out there is, have we seen the pre-harvest low, the harvest low put in at this point when it comes to corn and soybeans? Your thoughts on that?
Yeah, as we go through there, that's always such an important, price to go ahead and see. And actually, I'm pretty confident that yes, we have on both the corn and the soybean side. I thought the order would have been different. I thought we would have put in the low on beans probably easier than what we did on corn, but it sure seems like we did the opposite. We actually put in the low on corn earlier, and now here lately we've actually, when we had the crop WASDE report came out, it kind of confirmed where we were at. That kind of helped solidify and starts us moving higher. Now, the thing I want to caution us all on is that as we do move higher, it's not an easy road to go higher. We shouldn't all of a sudden be thinking, oh, guess what? We've got $6 corn and $14 beans. No, it's going to be a grind in here to get this thing moving higher, because overall, as we look across the world, there's a lot of things going on that we're going to talk more about, but in general sense, from the world side, we've got enough stocks of both corn and soybeans. Now in the U.S., we're going to get a little tight on beans, and we're going to be okay on corn, but that still means I think we'll go higher than this. It's just that this market won't run away on us.
All right, let's focus in on corn for a second. Looking at the pre-harvest low for December corn placed in September, 467 or so. You said, I'm reading into what you're saying here a little bit, maybe don't expect $6, but what's realistic as we chug away at the corn market? How high perhaps could we go? I suppose you can create a scenario for about anything though, couldn't you?
Yeah, you sure can, but that's a great question. So we know that $5 area that we've bumped up in around is going to be a tough one to break on through. From there, once we can break through that, I'd say then somewhere in that 5 to 510 area, we think the market has the ability to hit the 525 area. Now there's some things going on out there, with the war with Israel and Hamas that could cause us to shoot higher than that. But I think that'd be our first target we'd look at, somewhere in that 525 type area.
Beans, the low was about $12.50, as you mentioned, set I think October 11th or so for November beans. You bullish on them as well? We can keep chugging away?
Yeah, actually, I think the story on beans is probably even a little bit stronger than what we end up having on the corn side. The main reason, it isn't necessarily where we're sitting on the world balance sheet, because we do have plenty of beans across the world, but the story really comes back to the U.S., and that story that's happening in the U.S. is that we've got good crush demand. And actually, we ended up having a NOPA crush report that came out that showed that we ended up having a new record amount of production on the crush side for September. And what was interesting about that, though, is we also had a lower amount of basically soybean oil stocks than what the market was expecting. So what that tells us is that we're crushing more, and there's very good demand for the soybean oil. And much of that demand for the soybean oil is really coming back to being used in the renewable diesel. One other thing that I found interesting in that report was the fact that actually this is the first time that we would have used during the month of September more soybean oil basically from the renewable energy side than we ended up using from the food and the feed side. So that's an interesting shift. So the other thing about the bean side is that the ending stocks are tight enough, and when we looked at those stocks to use ratios, that here in the U.S., if our yield would slip down a little bit and we see exports increase, which I anticipate seeing that will happen in the future, our balance sheet starts getting pretty tight on the bean side.
Another kind of burning question, I suppose, in the minds of producers as harvest continues across the heartland is unsold bushels right now. Do you put them in the bin, take them to town, and I guess once they're in town, you get a few other options. Any particular advice you're offering to folks out there when it comes to that question?
Yeah, so big picture. This is how we kind of break it down as we look at it and say, okay, if you've got bin space, we'd say we'd like to have your bins full. And that isn't just because we think we'll see a higher futures price, but it is because we do think we'll see a tighter basis down the road, meaning a better basis level, less less negative, more positive as we go down the road. And that's really because demand is good enough relative to what the supply is. And that especially is true for all of our Nebraska viewers. As you get out further in different areas, that can change a little bit. So then once you've got your bins full on your farm, then we have to address and talk about, okay, now what do we do with those bushels that go to town? Because we've got some really good choices. As we get to town, our opinion is that we still will see basis levels improve. So as a result of that, we'd really like to see that grain put on delayed pricing or storage, whichever of those are cheaper. And then from there, at some point down the road, once we've seen the basis improve enough, now how much could that be? That's going to really depend on the market you're in, but if we see a 10 or 15 cent improvement in basis, that might be a stretch in some markets, but in others we've already seen that. Then what we'll do is that we will physically come out of those delayed pricing contracts and switch them over to a basis contract. By switching over to a basis contract, what that'll do for us is that'll stop storage or stop the service charges, allows you to take an advance on that grain, and still does give us the ability to still get a higher futures price down the road. Now we hope in here that we get a chance to actually get those basis contracts set not against the December futures on corn, but against the March futures. So we got a little time here before we'd probably lock in that basis. And then over on the beans, we'd really like to get those set against the point in time where they're bidding off the January and not the November. But that's what we're looking at right now. We don't want to be a seller of cash bushels that are going into town right now.
I appreciate your thoughts on that, Jeff. I want to wrap up with this week. When it comes to your marketing plan in the midst of harvest, what other things should we be thinking about? Yeah,
so really what we're focused on right now is we want to go back and revisit all our break-evens and know where we're at. We want to talk about with everybody involved in our operation, when do we want to move these bushels? So, do we need to move a certain amount here the latter, in November, December, Jan, Feb, March, or out there in April and May? The other thing we have to be watching is it's time, if you haven't done it already, to roll your hedges and hedge to arrives out. The carry that's in the market right now is sufficient. The carry in the market right now is good enough that by moving those out, and how far out can you move those? Well, in beans, I'd like to see them out against the March. If you don't want to go all the way to March, at least get to January. Over on the corn side, we should get those out all the way out to July if you can back roll them. Otherwise, get them out far enough so that you match them up with what your delivery plan is.